feet tap, tapping, caught up in the dance. Spin around, this rhythm's a thief, stealing my call, leaving no relief. Bass drops heavy, heart skips a beat. A symphony of steps, my mind retreats. Neon lights on, colors collide, lost in the groove, nowhere to hide. Echoes of a hook is haunting me, loops in my brain, no chance to break free. It's a spell, a loop, a melody chain, pulling me back, rewiring my brain.
Bring on that song, can't get enough. This groove is strong, the rhythm's tough.
Over and over, it's taking control. That groove has broken me, body and soul. Shadows on the wall dance just like me. Mirrors in the room reflect ecstasy. My sneakers squeak, the floorboards creak. Bassline speaks in a language unique. Sweat drips like ink, writing my fate. A story of rhythm, too late to escape. It's a pull, a push, a hypnotic fight. Trapped in the sound, no end in sight. Bring on that song, can't get enough. This groove is strong, the rhythm's tough. Over and over, it's taking control. That groove has broken me, body and soul. Trapped in the sound. Over and over, it's taking control. That groove has broken me. Bring that beat. Bring that beat. Yeah. It's a spell, a loop, a melody chain, pulling me back, rewiring my brain. Bring on that song, can't get enough. This groove is strong, the rhythm's tough. Over and over, it's taking control. That groove has broken me, body and soul. Bring on that song, can't get enough. This groove is strong, the rhythm's tough. Over and over, it's taking control. That groove has broken me, body and soul. Bass drops, heavy heart skips a beat. A symphony of steps, my mind retreats. Neon lights on, colors collide. Lost in the groove, nowhere to hide. Echoes of a hook is haunting me. Loops in my brain, no chance to break free. Bring on that song, can't get enough. This groove is strong, the rhythm's tough. Over and over, it's taking control. That groove has broken me, body and soul. Bring on that song, can't get enough. This groove is strong, the rhythm's tough. Over and over, it's taking control. That groove has broken me, body and soul.
Well, let's see. Are we in? Let's see. Looks like we have volume. Alrighty. Yeah. We got one or two people out there. Whoever that may be, hello. Alrighty. It has been, I gotta tell you, it has been an interesting couple of days for me. I won't get into it. But woo. When I tell you, you create your reality, man, it was pretty evident for me this weekend, up to yesterday. Yeah, Wow. But I'll save that for another time. Or maybe I'll just save that for people who are actually interested in that kind of thing. Um, yeah, pretty amazing. But right now, as you can see, what happens after a collapse? Because, folks, here, whether you want to believe it, see it, or not, we are in the middle of a reset. The Great Reset, yes. We are in the middle of it. I don't know. We're in the stages of it. It is a process, it is not an event. It's not an event like 9/11 or Pearl Harbor or something like that. It's a process. And the monetary system is changing. And AI is helping. AI is confusing things too. We may have gotten to a point where AI has gotten very intelligent, where it's very hard to predict things. Besides all kinds of manipulation going on. I don't know about you, but hey, it's good that say like oil is what under $80, which I'm very surprised of. We should be very surprised about that. I know you don't want it to be higher. You're happy, kind of happy, even though gas is over $4 a gallon on average in America. You're glad it's not five, but just last year was like three. Uh, but one would think with the war that's going on, how long now? March, April, May, June. We're going into the fifth month. Going on to the 6 month. The beginning August 1st will be 6 month. We were told it was only the last couple of weeks. We also had people saying, "Oh, the end is going to be, and if they don't straighten this shit out in a couple of weeks, we're doomed." We're a couple of months. It was like 2 months. Here we are, 5 months later. Oil never really got over $100 a barrel. You would think oil would be $150 a barrel easily now. Especially now, you got the the Houthis, just attacking in near the Red Sea now. So we're going to bottle things up over there now. So markets being manipulated. We're also told that our emergency supply, our strategic, the SPRs, our strategic petroleum reserves, are are in the lowest in decades, and it's nothing's being said about it. What do you believe? What is true? Are they just telling us these things to scare you and say, "Yeah, we got to finish them off," or whatever the case may be? Well, with that, I have, I listen to various YouTube channels and their analysis, and so I figured let me share some I haven't watched yet. So I'm just sharing with you the first time. Kind of try to kill two birds with one stone, you might say. So this first one I'm going to put up is I'm halfway through it already. This scientist, what is his name? It's like everybody's a scientist these days. Everybody's a scientist. Everybody's an investor, an economist. I don't know. Wait a minute. I'm having. I can't change my screen? What's going on here? And the phone's ringing at the same time. We just have to wait. Let's see. Okay, well, I'm trying to get a name for you. What's his fucking name? Okay, let's see. Let me exit full screen. Go into the description. His name is Simon Michaud. Simon Michaud. Let me get some background on Simon Michaud for you. He is a professional. This is how he describes himself on his website. Professional qualification: senior scientist at Geological Survey of Finland, geologian. See what else? Research interests are mineral processing, geometallurgy, energy resources, industrial recycling, and circular economy. Yes. Some interesting terms there. So, yeah. So that's who we're listening to. I was halfway through this interview on the Capital Cosm show. So I figure I'd play the rest of it as he goes into what would happen after a collapse, or if government services either diminish, cut, whatever, or are just gone. Because you can expect, definitely, you can expect some civil unrest for sure. Let me. How do I? Let me get full screen. Why isn't this overlay coming off? Sorry, guys. I gotta get this overlay off. Here we go. Oh no, that's okay. We got that off. And now, how do I get to my other background? It doesn't want to do it. Why does it want to do it? It's not changing backgrounds. Why isn't it changing background? Well, that's messed up. What is going on here? This is acting strange. I'm sorry. This is acting strange, folks. StreamYard is messing up on me. It will not change the background. Hmm.
What we call wealth is going to be redefined. And in fact, one of the many things I'm chasing at the moment, like we've got this idea, this is Wealth of Nations, Adam Smith. We've got this idea of a predetermined wealth is how much gold you've got in a pile. Right. So what is wealth? What are resources? All of that is going to be redefined. What group you fall in could be a function of the people around you as like a local group. Do they have the ability to take care of things themselves? So do they have the resources, the land, for example, around them, the industrial facilities, and do they have the skill set to do anything with them? That combination together. Or are they genuinely useless? Now, let's go and take stuff. Or will they just point blank refuse? This is all too hard, and they'll just sort of sit down and put their hands in their ears and just say la 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 la. Right, it's going to be like who you are and who are the people around you, and you might find people might migrate and move around to find like-minded people. And while we're going to be encouraged to think in terms of the nation scale, like I'm an Australian, you're a Canadian, we're in Finland. The nationalism fervor that's actually underpinning many nations around the world at the moment, expat go home, and the civil unrest that's been encouraged. Back to that plan that they're trying to destroy the very whoever they is behind this plan are trying to destroy the very things that might help us.
Hey guys, quick pause from the podcast, but this is something I feel is really important to let you
Um, I suspect it's not going to be as easy as that to define. It's going to be a big old mess, and we might have to learn a few things the hard way. Maybe it will work at the nation state level, but then you've got nations who are poor and nations who are very used to being rich, and nations who have military action stuff. We might say, oh, you want to take that pile of gold, you take it. You can't eat it. And if we're going to trade something else like bottle caps, then pasta lasagna, see you later, don't come back. Um, but yeah, and like I was part of a game theory simulation in Australia where they were looking at what the group we might call the Vikings, local bikie gangs, who think in terms, oh, who are part of, say, the organized crime part of society. They go, right, we're going to rule the place. And says, well, we're going to take stuff. But all the valuable stuff is things like the ability to grow food. So it's not going to occur to them to take that box of shovels or to start digging trenches or anything. So they'll start ranging around to try and take stuff from the surrounding communities. But then someone pointed out, well, if someone was to shoot them in the fuel tank as they're riding along, you're riding along on a motorbike and someone with a rifle pops up and shoots them in the fuel tank, boom. Yeah, are they as strong as they claim to be? And what the Vikings will do will actually encourage people to think a certain way and take certain things seriously. But very quickly, all four groups will have to evolve. Or we could just go through the point where if we were able to maintain our energy systems for long enough and actually transform our systems into a more regional scale, where we step away from the long-range global supply chains, we might be able to maintain control at a nation-state level, and things will just get a bit difficult for a while, but we get through it. But society becomes fundamentally simpler and on a regional scale. We no longer get stuff from the other side of the planet based on when to be delivered on Amazon.com. Yeah, so yeah,
It seems like a tough ask, Simon, because from my perspective out here in America, people are just very comfortable. There's no real desire of like meaningfully changing society at large. I mean, don't we
they won't
need
do it
to
willingly.
feel
No one's
pain?
going to, no one's going to do it willingly. I'm very comfortable. I'm currently more comfortable than I've ever been in my adult life, right? Which means it's time to jump off a cliff and go and do something else. You're too comfortable. You're institutionalized. But if we get to a point where certain things just aren't available anymore, and the normal ability or ways of accessing these things don't work anymore, and the oxygen is turned off in certain parts of the system, so where do we find other stuff instead? It won't be willingness. It's like in the Great Depression in 1929. Certain things just became unavailable, and society evolved, and they made do with what they had. And at the time, it was pretty miserable, but they got through it. I think it's going to go something like that, but it's just the question of how difficult things get will be at the depth of the transformation. I'm now looking at an energy system of thorium molten salt reactors. That changes the calculus. We've now got a path through the energy network. Now we need to find a path through the resource sourcing and the smelting capability that we've now turned over to the people that we want to go to war with. How do we fix that? And behind that, how do we fix the food production problem if we're not allowed to use industrial fertilizers anymore? Do we fall back on? So that brings us to the the ages discussion. How are we doing for time, by the way? You've got to go soon, right?
We've still got about 20 minutes.
Yeah, okay, great. I take my lead from you about where we go with all this. So I got this idea of the ages. Yeah, you often hear about the industrial revolutions, 1, 2, 3, 4. So the first industrial revolution, IR1, that's based on coal, steam, manufacture, and textiles. IR2, the second industrial revolution. Of course, it changes depending on who you talk to. So this is like a fairly loose definition. Oil, internal combustion engines, electricity, the chemical industry, mass manufacture. IR3, or the third industrial revolution, starts out with natural gas being available widespread, which then accelerated all industry, petrochemicals, steel mass production, fertilizers, plastics, transistors, and microchips. And now,
are you sharing anything, Simon? Because if you are,
no, no. I'm just reading it. I'm trying to wean myself off PowerPoint. It's possible I have a problem.
PowerPoint addicts.
Yeah. Anyway, so the
Yeah, check. Oh, fuck me. Fuck me. Sorry about that. Oh, what the fuck was I? What was I just saying now? Oh, his PowerPoint. He says he's a PowerPoint addict. So I said I have no problem with using PowerPoint. It's like you're just referring to notes. Give you a presentation, help you move along. But what I hate is fucking. I recently seen comics on stage bringing a phone up for notes for their act. I don't know. Is it me? But it would be kind of funny on you go to a theater and see fucking actors with notes, reading from their notes. I mean, really. Happy 420. All right. Sorry, I was fucking muted all this time. Well, I didn't say much anyway.
fourth industrial revolution, which started around 1995. But it always starts small and builds over time. So it's information, the internet, the mobile phone concept, AI, and nanotechnology to start, and other things will start sort of coming in. We're very comfortable about talking about that, but to me, it's more complicated than that. We've got other things. So what about, energy?
I got to step away. I'm going to let this play.
Ago, again, I'm not sharing anything. Thousands of years ago, it was human labor. Take, stick, dig, hole. Then it was, and part of that says that we use livestock. So there was an age of, before industrialization. For energy. Then we started burning wood, and that was our first our source of fire. Then we started burning coal. Then we started burning gas. Each of these are energy sources that change. What's interesting is nuclear, when it started in the 1950s, had such a lot of hope, but it hasn't actually changed anything. We still get most of our electricity from something else. However, the current nuclear industry could be the forerunner of the next generation, which could save our bacon. The next generation could be a breakthrough, an evolution of what we call nuclear technology into something fundamentally different. So we've got different energies, eras of energy. Then we had agriculture. Right, back in the day, it was hunter-gatherer. in a tribal sense. Then we started structured agriculture, cultivated crops. And then we started the idea of using fertilizers and started industrial agriculture. And in the 1960s, the petrochemical revolution took off, and that was a new era. So we've got multiple eras of food production. But that era is now coming to a close. The arable land is being degraded hard because of how we're doing that. And the water runoff from that is flooding the planetary water systems to the point where the nitrogen and phosphorus cycles are being overloaded at a planetary scale. That is code for we won't be able to use industrial agriculture for much longer. But then the question is, what do we replace it with? And whatever that is, that's the next era. Do we just fall back on how we used to grow things back in, say, in the 1930s and the 1920s? And that may be the answer, because we have no other answer at the moment. But our yields won't be nearly as good, and we've got far less arable land. So we've got a problem there. Then we've got money. So that's also gone through several ages. Back in the day, it was gold bullion. I got me or you've got the era of trade. We had the era of trade, so that was one era. And then we decided to trade gold bullion. And then we had the idea of having copper coins instead of gold because they kept getting stolen, or the idea of the promissory note and banking that started in the 12th century. Then in 1913, with the formation of the US Federal Reserve, we had fractional reserve banking. That was an era. We had the fiat currency era that came from that, the Bretton Woods thing that kicked off. Then from 1971 onwards, we had the era of fiat currencies. These are different eras. The fiat currency system is coming to an end. What do we replace it with? It will be different. So I got this idea of we've got multiple eras overlapping themselves. And we've gone through several stages of evolution. And as we're now going forward now, the underpinning thing of where do we get our energy from, where do we get our resources from, is all going to radically transform our society into something else. And as I was saying, it's from the orbit looking down, we're up in Earth's orbit looking down, what are the big picture structures that we're looking at? That graph I like to show where in 2005 everything started to blow out and go nuts.
The commodity charts.
Yeah. That tells me that the era of the existing systems is starting to break. Started back then, and we're in a transformation era that could be 10, 20, 30 years long, whatever it is. But it damn well is transforming into something. Right, but it's not just commodities. Everything's moving at the same time. And I suspect the people who, what I call the oligarch criminal class, they know this. And they're arranging things for the maintenance of their own intergenerational power at our expense. And there may not be an easy answer that we like. I suspect the answers were there, but it meant they would have to cede power. Thus, it was unacceptable. We could have had this conversation 50 years ago, but we didn't. Yeah, and so that's my sort of this is what.
But are they not becoming more entrenched with the AI surveillance system? I mean, you got all these flock cameras around here now. You've got all this compute going in, crunching the data, everyone's personal life. I mean, aren't they creating like a predictive powerhouse in terms of being able to surveil the society and predict future pre-crime stuff and minority?
So all that's being rolled out. In the Minority, but what a great story that was. It's all being predicted, as in yes, that's what they would like to do. The question is, will it work? Will they be able to maintain control of that? That's still to be questioned. Like they may roll the plan out, but it might only last for a couple of years. Before something drastic happens. What if the old phrase, what if they had a war and no one turned up to fight it? What if human consciousness raised to the point, when communication raised to the point where we understood what was happening to us and we refused to go along with the program?
But once they have the CBDCs or the digital currencies, they'll be able to coerce people to do things out of their own desire, because they'll just turn off your money.
If the plan works. So what you're suggesting is absolutely true, right? But what it also requires our compliance to go along with it. We may not have a choice to actually take part in the system. Like if I'm put in a situation where if I don't accept the CBDIC, I have to watch my kids starve to death, or something evil like that, we could be forced into. And most people will just say, "Yeah, we'll just go along with it then." But will the system actually work? Will it actually be stable enough to keep running for a couple of years, or will things start to break down and break apart? because it requires people to, the idea.
Was COVID and the lockdowns a test of compliance?
The idea of bread and circuses. The whole purpose of bread and circuses is to keep the population quiet. Now, Gerald Salente, when he's often sort of talks about when the average person loses everything, they've got nothing left to lose, they lose it. Now what? I'm not convinced, even though the plan has been put together and studied over 70, 80 years, this is what we're going to do, and especially the last 50 years in particular. I'm not entirely convinced it's going to be successful. Like, it's not going to be a smooth operation. If humanity at large decides to just roll over and go, oh well, we're no different from a yeast culture. We're just a pack of goldfish. Off we go. Then maybe it'll work. But the problem is, the average person has become educated. The average person has come to believe in things like human rights and the idea of equality between the genders. That's now given. So what happens when we're put in a position where that's taken away from us? Are we just going to roll over and accept that like we have in the past? Right, like.
Yeah, what do you think? You're gonna roll over and just accept?
I think a series of false flags that are so large would be needed for that, but we've now got a very cynical population. I do think they'll try. I just don't think it'll work. And what it looks like, and I do suspect the window between when things are possible and when things are irrelevant is quite narrow. But when we sort of hit that window, what does humanity collectively decide to do? Or is it a case of most of humanity will go down one path and small parts of humanity will break off into parallel systems? And you might have 10 or 20 years of parallel systems. And we'll see which one survives long term. This is why I put together the idea of the alchemical string, because people have to believe, have to become true believers at the end that the system will work to the point where they support it and defend it. And if that doesn't happen, a vast amount of energy and resources will have to be put in place to try and coerce people. And it could be things like control of the food system, for example, or all the stuff that the Soviets tried to do, which in the end didn't work. And the Soviet thing didn't work as an internal collapse. The Soviet Union collapsed about 3 years after they peaked in oil production. So there is a link between energy and the stability of society.
Mm-hmm.
And the idea of techno-feudalism, that's not going to work if there's not enough energy to go around and we can't make the semiconductors to make all the toys. Right? Has the game theory been done properly?
Well, that's where the wars come in, right? And look what they did in Ukraine. Look at all the dead in Ukraine. I mean, can't that be replicated on a bigger scale?
Yes, it can.
If you thin out the herd, then you don't need as much material in your data center production to service 8 billion people. Again, will it work? Yes, it can be replicated. I heard a really disturbing thing about Ukraine. That they are on purpose depopulating Ukraine and wiping out in domestic systems, but they're rebuilding them according to the new vision, the new smart system. That was dark. Oh, that's what I'm saying. Yeah. Is Ukraine a prototype for the globe?
Well, I think the majority of people have been fed a story which is remarkably naive. But when that naivety lifts, I suspect people won't go along with it. So that's what I'm saying. The window between when things are possible and when things are irrelevant is narrow. What do we do?
That is true. That is true. I mean, you look back at 2020 and 2021, things were super grim. It seemed like they had pretty much taken control of everything back then. And fast forward now, it's 2026, and they haven't.
So for the COVID experiment, they really tried very hard to roll out the COVID passport. You remember the COVID passport? That was the digital ID, which is the missing piece for the control grid that they're trying to put in place. They'll have a programmable currency, but that's not going to work unless everyone's got a digital ID. Like in Australia, they're just apparently anyone with what's called a MyGov account. It's like they made a website to access things like child support or social security or things like that to try and interact and communicate and make things easier. That's what we're doing, right? Well, later this year, they're just going to quietly turn that into a digital passport, which means
a digital passport in Australia. Yep. Turn your government website. Yep. There you go. Get ready for that digital currency. That's what's going to happen. probably. Folks will sign up for their currency because they'll be offered a bonus. Sign up now and get $200 free money when you sign up for your crypto account, your government crypto account. And then you will have to use your money credits in a certain amount of time. Man, who knows? There might be ways of earning and losing, and you'll lose credits, like the social credit scores. You want to eat well this month? You best be on your best behavior. Or no free money for you. Yeah. You want the government? There you go. We are the government. We're here to help.
The majority of Australians will have a digital passport. Then they'll say, well, if you don't use this, you don't get access to certain services. So they're not asking permission as such. They're just quietly doing it. But we've had examples of people standing up, like the Canadian truckers, when they did things, even though they paid a terrible, terrible personal price, they stood up and the rest of the world saw it. And in the end, they were largely successful, even though it came at a terrible price personally.
So one thing I will say about the COVID.
Go Canadian truckers, yeah. Bucky, let's see some American truckers do that. Oh no, the American truckers are now Mexicans.
Lockdowns was that it impacted people's life on an explicit level. Like you could tell that you were being locked down by your government. Now things are, we've got inflation, we've got rising energy costs, but it's hard. It's not as explicit as it was back then. Like it's not as identifiable to the point where people were incentivized to take action. Now it's kind of more loosey-goosey. You've got all these flock cameras all over the place. Again, you've got AI data centers being built out, but it's not really impacting people's life now to the point where, like you said, the Canadian truckers, things just became so unbearable. They had no choice.
Yeah, the Canadian truckers, remember, they were protesting. What were they protesting? The lockdowns. Again, they can't get their money, right? Access to they turned out I think they went and accessed their accounts, the protesters. That's what the government did to some of these guys for speaking up.
But to go out there.
So, right. And so the question is, can we do that again? But what COVID did was red pill, so many people, or red pill, black pill, whatever you want to call it, so many people all over the world, all of a sudden started to understand stuff. And so many whacked out conspiracy theories are now proving to be true. Right.
And in a way, they've kind of leaned into it, no? Like
yes, like I said,
now they flood the zone with conspiracy theories. Now you don't even know what's real.
Oh yeah. I was the crazy one, not wanting to get the shot. Yeah, I remember.
Anymore.
And that's the thing. What was it? CIA quote: "When the average person has no idea what is true and what is not, and they don't believe anything, we've done our job." So the corruption. Remember that fiction series, Three Body Problem?
You've mentioned it
science
before.
fiction.
I've never read it.
Brilliant science fiction. An alien species is coming to Earth, has discovered Earth, and they're coming to take our resources, right? And but humans are developing at such a phenomenal rate that by the time the aliens get there, they would actually overrun the aliens in sophistication. And their solution to that was to send an advanced guard to Earth to change our reality. It's science fiction. I didn't quite understand how they did this, but to the point where they corrupted our science. When we're doing our science experiments in the quantum realm, for example, the results were hogwash, and we just couldn't depend on any of it. And in doing so, they completely hamstrung our technological advancement, right? And so that to me is what the purpose of all this is. Fake news. Remember, how they say the Russians hacked the American presidential election? They said that every night for like 3 or 4 years. Rachel Maddow, or whatever her name was, on NBC or whatever.
Yeah, right. Say a lie long enough. Strong enough.
It is. Yeah, every night, Russia, 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 Russia. Then it comes out later, yeah, that wasn't correct. Everyone lied. And then they just moved on as if nothing happened. Yeah, and everyone just accepted it.
Well, now you've got the GOP flavor to it. Now you've got the Chinese hack the 2020 elections.
Yep.
Oh, and now we're finding out Biden, did have classified fucking information. He admitted to in his memoirs, and notes to his ghostwriter. They had classified documents in his house in the basement. But nothing will come of it. Nothing will come of it.
There's a theory.
Which, by the way, I mean, there was some sketchy stuff going on during the 2020 elections with the mail-in ballots and the results just changing overnight. But be that as it may, it's kind of the same.
So that was very sketchy what we saw in 2020. It did look like industrial fraud was happening, but both sides were doing serious monkey business. How's this for an idea? The orange hamburglar, let's call him Trump.
Uh-oh. What happened? Oh, man. By the way, I had a power outage earlier.
Is now putting out the idea that the 2020 election was hacked. Okay. They will use that as a pretext of saying the system is broken. We will therefore delay the election happening next.
Or deploy the military at the polling.
What they would have to do was Trump would stand down and hand over control to the military, and then it would be no, that's unprecedented, but that's the constitutional law that's happening. Incidentally, you know how I like my books. What I'm studying greatly for the future is there we go, the Constitution of the United States. This is a historically remarkable document. But
speaking of, I think Trump. I don't know where Trump was. And he made this quote-unquote announcement that he's running for president again in 2028 for what he calls a fourth time that he's going to win. And people really taking him seriously. It's just, well, he just can't. Constitutionally, he cannot. He would have to change the Constitution. So, yeah. He's trolling you. He's wearing his Trump 2028 hat now. Unbelievable. So he's either trolling or he's delusional. I think he's a little of both.
So this is the idea that Trump is the face of a much larger group, and there comes a point when he's outlived his usefulness, and they'll put someone or something else forward. And it could well be civilian administration is suspended. We'll now do military instead because we're now at war, or some stupid shit like that. We are in an unprecedented time where big structural things like that could break, and we are required to think for ourselves, and also think in terms of, without fear, cooking our ability to reason.
Right. Well, hey Simon, I know you've got a lot more ammo left. You've got a lot more juice in the tank, but I have to cut it short, unfortunately. I've got a hard stop here in a bit. Thank you so much for your time as always. Well,
all right. So that was the last half of that interview. There was another one I wanted to look at. Oh, Groman. Luke Groman. Is that the one? Yeah, let's go with that one instead of there. Yeah. Okay. I'll put it on. Let's see. I'll put it on 1 1/4 speed. Let me hold on a second. Good for you, nerdy. Good for you. Yeah. Good for you, nerdy. For those who don't, let me Let me get a little bit of a bio for you here. Luke Groman is a macroeconomic analyst, founder of Forest for the Trees, a research firm that provides insights for sophisticated investors and institutions. Groman has over 20 years of experience in thematic analysis and equity research. He's known for his ability to connect industry news and draw conclusions that help investors understand the bigger picture. That is Luke Groman for you. So again, I'm gonna put on 1 1/4 speed. What he usually this is not. I don't think this is. I think he's doing an interview. This is not his channel. He does have his own channel where either weekly or bi-weekly he answers questions. Other than that, he's doing interviews.
Germany, Japan, and Korea are all historically big creditors from a sovereign perspective. And in particular, Japan, if they're borrowing money to do defense stimmy, they have turned sellers of bonds as well. So now they're competing with Besant to place bonds. Like everywhere you look, yield should be going up. And so to me, it's just all about when does something break at any of them? Because once it breaks at one, they're all going to have to do something. And that something's going to look a lot like yield curve control, although my suspicion is they'll never call it yield curve control until they have to.
Today's episode is brought to you by the Fundrise Income Fund. You'll hear more about the Income Fund later in the show, but for now, let's get into today's interview. Welcome to Other People's Money. I'm Max Wheaty. I am joined today by Luke Groman, president and founder of Forest for the Trees. Luke, thank you so much for coming on the show.
Thanks for having me on, Max. Great to be here.
So there is so much happening in markets and macro right now. We have yields at 20-year highs. I want to understand what is the driving force for this sell-off in the bond market.
I guess ultimately a supply and demand issue. And then the secularly inflationary dynamics or results of how the supply demand issue has been managed. What do I mean by that is that we've seen the U.S. in particular shift issuance to the front end since Yellen late in 23. Besant criticized it. As soon as he got in Yellen's seat, he did the same thing, except more, or at least as much. But then it accelerated the Treasury buybacks that Yellen was doing, which was also shifting to the front end on the margin. And he accelerated that quite a bit versus what Yellen was doing. And if you take a step back, why is this happening? It's very straightforward. No one wants to talk about it, but it's very straightforward. It's right in front of everybody's face. We kept $100 trillion plus in the United States. Europe had, and the UK also have their off-balance sheet liabilities. They were all off-balance sheet. And they were always going to stay off-balance sheet until people started getting old. And any sixth grader with an actuarial table and a calculator could have seen that if 65 million boomers were going to be born, they were eventually going to hit retirement age and start collecting. And once they did, these off-balance sheet liabilities would start coming on balance sheet and being cash flow negative. People said, oh, you don't have to worry about it. It's not part of our debt to GDP until they turn 65 and start demanding a check. And now they are. And so that's happening all over the West. Adding to the problem, they would have been bad enough on its own, but adding to the problem has been that the United States in particular has been engaged in forever wars for going on 30 years now, 25 years certainly. And so when you look at veterans benefits, which, you know, right after the Vietnam War, right? Expensive, messy war. Veterans benefits as a percent of the defense budget got as high as 12% of total defense spending because it's a.
Oh, by the way, my fellow Gen Xers, yeah, I am definitely taking Social Security early. I'm gonna take that money while it's still there, and I think I'm going to go 63. I'm definitely not going to 70. I'm not waiting at 65. I'm looking at 63. And I think invested wisely, you know, I can make up for any of that extra money that they so-called say they give you if you wait. Because it's just the dollar's getting worth less and less. So why should I let them have it for all those years?
Accounted for separately. And then during the 80s, the 90s, fell back to 3, 4, 5, 6. It's turned up sharply in 2010, and it hasn't stopped. It's now 27% of defense spending. And
And it's not like defense spending has gone down. It's not like
Defense spending hasn't gone down. This chart looks like this. And this, again, is an off-balance sheet liability that comes on. You want to go to war? Great. You got an awesome military? Great. And you better reserve for what happens on the other side of a war if it lasts too long, which is you're going to be paying out a lot of benefits. We didn't. So now those are coming on balance sheet. And to put some numbers around it, $400 billion of veterans benefits annually now. It's about 8% of tax receipts, which are near all-time highs. And it's growing at like 2 to 3x the rate of tax receipts, because we refuse to stop doing stupid wars, and because our guys are getting older, and because of the money we've printed to pay for the veterans or the entitlements that are coming on balance sheet, etc. Inflation's rising, and so the cost of care is rising. So
and I mean, I only came across a couple of examples, and I don't know if you remember somebody came interviewing online. I don't know, he was in a chat or something. Some of these benefits are given out to vets who injuries claimed are, they seem frivolous, because these guys are still working full-time jobs, able to move around. So, not saying that nobody should get benefits, for sure. You lose a limb or whatever, or your life, so your family should get benefits. There's definitely fucking PTSD. But what, you got a little backache, you should get benefits? You hurt your pinky? But he's right. I mean, you got more war, you're gonna have more injured, you're gonna have to give out more benefits, and yeah. Shit. A lot of money's talking there. The government continually spends more than they take in on taxes. How long do you think that's going to last? And now they want a $1.5 trillion Department of War now. $1.5 trillion. More money than top other four countries, next four countries' military budget combined. And yet, we're having trouble with Iran, who has a $7 billion budget.
you're getting like triple whammied there on the veterans benefits costs. And so when you look at just the interest expense on the debt plus the entitlements, you're nearly 100% of receipts. You throw on veterans benefits, you're over 100% of receipts. And that drives a very simple dynamic, which is once you're over 100% of receipts, with debt where it is, you can't raise taxes because it triggers a recession. You either print or you cut benefits. And when more you print, the more inflation goes up, the more inflation goes up, the more yields go up, the more yields go up, the less attractive, or the more inflation goes up, the less attractive long-term bonds are, the more you have to shift to the front end. The more you shift to the front end, the more inflationary it is, the faster the debt reprices when the interest rates go up. This is the spiral the US, the UK, Japan, and Europe are in.
Yep. More inflation is coming, my friends. It is a coming.
And being in this is a very recognizable spiral. We saw it after World War I in the UK, in Germany, in France. The US paradoxically took care of it the way the Chinese are taking care of it now, which is stand aside and let stuff fall in price, like housing. We had a huge depression for like 18 months in the early 1920s. Jim Grant did a great book on that. Anyway, this is why yields are going up around the world. And there's no easy answer for it. Again, smart people are looking at the boomers and the boomer generation around the world going, and in the West, going, all right, well, they're not going away. And
by the way, inflation is not higher prices. Higher prices are because from inflation. Inflation is increasing the money supply, making cheaper money, causing the inflation, causing the rise in prices.
It's very obvious. They have to keep inflating.
Well, it's interesting. We just had another ceasefire pause in the war as people consider the cost of the war. And if you were being generous, you would say, maybe we have some sense here in trying to keep the cost of this thing in check. But the alternative way to look at it is, I can't remember a time with the idea of America not being able to afford waging a war, that it is maybe a signpost of that negative side of things that you're talking about, that we can't actually afford to wage this war.
In short, yes. There's, we can wage war on weekends, and as long as the 10-year Treasury yield is below 4.7%, which tells you either it's not that serious a threat on one hand, right? Let's number one, it could mean it's not that serious a threat, and Trump is going through the motions, so he keeps his friends in Tel Aviv happy, or it means we can't go to war anymore. And it has huge macro geopolitical implications in terms of what we hear so often, right? Ultimately, the U.S. military backs a dollar. Hey, if you try to make things multipolar or sell oil outside the dollar, we're going to come and send the most powerful military in the history of the world, and we're going to beat you over the head with it. And if the latter is even partially true, those things aren't true anymore. And I think that's what's happening here. And it's such early days in terms of the implications that I think markets are just waking up to the sort of the reality of it. And, oh, by the way, that then feeds back into inflation, because look what's going on around the world. What are we hearing? Somehow they all got the same idea at the same time. I say that, facetiously, because I think they all sat down and said they're going to do it. Japan, UK, US, all saying we're going to run basically defense stimmies, right? So in COVID, we did consumer stimmies, where you run deficits and you send money to consumers to buy stuff. And these 5 are doing defense stimmies. They are borrowing money to rebuild their defense bases. And 3 of those guys, right, Germany, Japan, and Korea, are all historically big creditors from a sovereign perspective. And in particular, Japan, to a lesser extent Germany, big creditors of the United States. Well, if they're borrowing money to do defense stimmy, they have turned sellers of bonds as well. And so not only is it inflationary, which reduces demand for attractiveness of long-term bonds at current yields, sends yields higher, but it also turns Japan from bond buyer to bond seller. So now they're competing with Besant to place bonds. Yields up. Like everywhere you look, yield should be going up. And so to me, it's just all about, when does something break at any of them? Because once one breaks at one, they're all going to have to do something. And that something's going to look a lot like yield curve control, although my suspicion is they'll never call it yield curve control until they have to.
What about now? A lot of people have been saying, just looking back over the last 10 years, real yields have never been higher. But if you look back even further, the idea of real yields at 2-3% isn't that crazy. Do you think we're heading into a world where to make these bonds attractive, if the only way that we know is to keep printing, to keep issuing debt, I mean, are we going to have to see sustainably higher real yields to make all of this paper attractive?
It won't work. If that's the plan, it's a disaster, because high real yields, when you have debt to GDP of 125% and it growing faster than your economy, right? So the United States is a highly financialized economy. High real yields are going to drive much slower U.S. growth. And the key driver to U.S. growth for the last 12 to 18 months has been tech, has been AI, which is borrowing a ton of money now, and which is very sensitive to positive real yields. It needs negative real yields. So basically,
oh yeah, and the whole AI and what was again, NVIDIA, Oracle, Alphabet, Amazon, and Facebook in there too. So, and they're all in this circular loop, lending and giving to each other, and it's like this whirlpool.
what that translates to, anyone saying that, hey, we need high real yields to place that paper, is we need to put a bullet in tech, and we need to put a bullet in the American economy to place those bonds. And then once you say it like that, you realize how nonsensical it becomes, because if you do that, the U.S. will go into recession. U.S. goes into recessions, deficits are going to rise non-linearly. Last 3 recessions we've seen deficits rise 600 to 1,200 basis points of GDP. So GDP is what, 31 trillion? So you're going to add 2 to $3.6 trillion on top of a $2 trillion deficit in a world where you have positive real yields. And now what? Now you still have your entitlements coming on. They're going to come faster because in a recession, those numbers grow even faster. So you're going to be looking at that number I quoted before of interest, gross interest plus entitlements plus veterans benefits. It's maybe 104%, 102% today. It's going to go to 130%, 150%. And what's going to happen is the dollar is going to skyrocket as the U.S. government crowds out all global dollar markets trying to place paper. And the treasury market dysfunctions, the stock market crashes in the US, around the world, the economy. It's basically early days of COVID, from the portion where treasury yields started going up instead of down, until they step in and start buying treasuries under the auspices of treasury market functioning in numbers that would make what they were buying under COVID look quaint by comparison. So the positive real yields, people said, hey, sell gold on positive real yields. All my friends in emerging markets, they're like, when your debt to GDP is 125% and your deficit's 6 and it's growing faster than your receipts and your positive real yields are going to slow your receipts, the last thing you should be selling on positive real yields, on real yields rising, is gold. You should be buying gold hand over fist because you know how it's going to end. It's just a question of when. So that's just a matter of positioning and leverage.
So when you hear the new Fed chair talking about reducing the balance sheet, that's just got to sound farcical to you.
Yeah, I think it's absolutely farcical. And I think he's saying what he has to say. And I think markets have a way of testing new Fed chair people. And I think it would be a delicious irony if Warsh, who is so desperate, he's been so vocal that he could have done Powell's job better than Powell did. And look, I'm not I was a critic of Powell. You sort of had a moment in time where you can inflate away the debt, and he chickened out. That was the brave thing to do. He should have done it, but he couldn't do it. So I've been no like big supporter of Powell. I think he did fine. But to hear Warsh talk about how he could have done so much better is absolutely farcical. And so I think it's going to be a wonderful, delicious irony to watch. If he tries to do this, he will end up having to grow the Fed's balance sheet bigger, faster than Bernanke and Powell ever did in all likelihood. And so it's just, everybody wants to pretend like the debt isn't 125% of GDP. And everyone wants to pretend like there aren't 65 million boomers that are, somewhere between age 80 and age whatever they are, 64. And they want to pretend that we haven't been at war for 25 years. Like if we, it's like the old joke on, the three scientists on no, scientist is being generous. 3 people on a deserted island, right? A chemist, a physicist, and an economist. And they're like, oh, we, can washes up. We've got food. Great. Chemist is like, hey, we could use chemical reaction to open it. Great. And the physicist is like, hey, we can, create a lever and open it. And the economist is like, no, let's just assume a can opener. And so like Warsh is like, let's just assume the federal debt isn't what it is. The entitlements aren't what they are. The veterans benefits aren't what they are. And that we have a non-financialized economy that isn't highly sensitive to real rates. Like, what are you doing, dude? Just take your friggin' medicine, mark it down, move it on, and let's go. But otherwise, it's just going to be, more of the same.
I hope you're enjoying today's episode. One of the most powerful vehicles in finance for generating reliable from the Fed. But I mean, just looking at.
Yeah, I think Fed meeting tomorrow, right? They decide. What do you think? You think he's going to cut rates? You think rates going to be? You think he's going to raise rates? You think he'll do nothing again? What do you think?
The price reaction to the ceasefire announcement, in the past with oil down like this, you would have expected bonds to really rally. The equity markets are now negative on the day that we're recording this. So we got a ceasefire, and with the outside of the oil markets, we couldn't get the reaction. I mean, what do you make of that? And as well, the AI trade unwind, as you said, it's highly tied to rates. How much of this do you think is where we are in the bond market affecting the equity market versus people starting to doubt that we're going to achieve, artificial general intelligence?
I don't know that they're doubting we'll achieve AGI. What I think has come into play is China, right? This reminds me so much of so much else I've seen as it relates to China, which is, oh, don't worry, they're never going to catch us. They're closer, but they're still never going to catch us. Oh, yeah, they have a competitive offering, but it's just cheaper. It's not as good. Oh, God, it's cheaper and it's better. And by the time you get to that last one, it's over. You've lost. And I think that's what we're in the early days of seeing with this AI, which is, again, 2000 dot-com bubble, it burst. Who cares? It was mostly equity issuance, right? The equities go to zero. Sorry, thanks for playing. If you believed in, the sock puppet, you lost. Okay, great. That's markets. the second they started borrowing money en masse to finance this, and then using these vendor financing arrangements, et cetera, and then it got looped into a national defense imperative. I think that's what we're watching, is the fact that people say, well, there's a big debate. Is Japan better? Or excuse me, is China better? Is China not better? I don't know. I don't have the credentials to know and evaluate which AI model's better. I read smart people who I think do have the credentials, and they kind of go both ways with different. Here's what I know: 30 years in markets. The fact that we are discussing is China competitive or not is all that matters, because it means it's close enough for government work. And in sectors that are as richly valued as this, I mean, we are valued in friggin' la la land on multiples of revenues, PE to the ones that even have earnings, and they've borrowed a bunch of money. It was all borrowed on the come, all of it. Well, it wasn't like they had the cash flows to pay this stuff. And so if you have forget about a down round, if you just have a slower round of refinancing things like OpenAI equity, et cetera, the whole thing starts to come unwound. And that has capital flow implications, that has growth implications. And to your point, that the long bonds in the United States, 10 and 30-year treasuries, sold off over the last 2 weeks or last month as the AI trade was questioned over the last 3 weeks, is a really troubling signal. Now, you could say, well, we went back to war and oil went up, and that's why. Fair point. But I think you raise a great point, which is oil's down today. What's a 10-year? I saw it earlier, down 2 basis points.
I mean, it's not the rally you would expect for oil down $5 on a pause of the war.
No. And so, yeah, I think it's super important. We had charts in a report for clients last week, which highlighted, I saw that labor force participation rate in the United States is tanking. It's not only is it tanking, but it's back to COVID lows. And I'm like, all right, well, let's just see what this looks like. I took it back to 2000 and I compared it to 10-year treasury yields.
That's
and it's like
nuts.
The same chart. Lower labor force participation,
That's
lower
nuts.
10-year. Makes sense. Deflationary. 30-year, it's even tighter. Well, let's look at 10-year term premiums, right? So what's
everybody just borrowing money and not paying it?
the rate the market's demanding to buy U.S. longer term paper against that, and it's pretty correlated until 2022-23, and all of a sudden, long-term yields and term premiums have taken off as labor force participation rate has turned down, and in the last 6 to 12 months, all three of those have taken off like scalded cats as labor force participation rate has tanked.
Oh, by the way, months ago, I don't know if anybody remembers, I talk about moral hazards happening. They'll get to a point, it's happening now. Increased default in auto loans, foreclosures are going to go up. I mean, the houses are the last thing that people are going to want to, give up is their house. But it starts with the credit cards, and then it goes to the auto loans, and then finally the mortgages. Especially these young folks, they're like, hey, there's no chance of me getting a house. They're going to spend, they're going to pay it back. It's like they look at the government and what the government's doing in debt, creating a moral hazard.
That is emerging market with a debt and fiscal crisis price action. There is no world where a declining labor force participation rate should be driving.
Now, I don't mean to scare people because I don't want to put that in the forefront of your mind. But it's just to maybe shake up those who are not even seeing what's going on. It's those of us who have been prepared for this, right? You want to have your food, you want to have your energy, you want to have your guns. Guns, gold, and groceries, I say. You want to add your God? Go ahead. Add your God.
Driving sharply higher yields. There should be no world there. None. And yet it's happening. And so why? I think it goes right back to that discussion of, hey, we can pretend, right? You can ignore reality, but you can't ignore the consequences of ignoring reality. And Warsh and all the others are ignoring debt to GDP is 125%. Japan's a seller. Germany's a seller. Korea's a seller. UK's a seller. UK's been our second biggest creditor, by the way. So they're going to build up their military. Chances.
Yeah. Hello.
And then you've got debt as well. Like I said, debt where it is, and you've got these off-balance sheet liabilities coming on balance sheet at rates that are 2, 3, 10x of what receipts are growing, what GDP is growing. It's the same. It's the same problem Weimar Germany had after World War I. I mean, I don't think that's where we're going because for a lot of different reasons, but directionally, it's the exact same problem.
Now, you talked about the changing nature of the stimulus that we're going through right now compared to COVID, where it was sort of direct to consumers. I mean, do you view there being a potential that all of this AI spending has become such a big driver of the GDP growth of the U.S. economy at this point that it is in many ways the stimulus, and it will be backstopped?
Yeah, I do. And to me, the only question is how big a drawdown do you need to justify some sort of Treasury or Fed backstop bailout guarantee of the AI thing? I heard credible rumblings the subject was broached 6 to 9 months ago already.
Oh, really? That they've already discussed what happens if this whole thing unwinds?
In specific cases.
Okay. And would it be just like the public bonds, like the big bond issuance that we hear about from the major companies? Or are they how far down do you think they would go?
What was the Fed buying in COVID? Weren't they buying junk bonds? Weren't they buying corporate? They were buying corporate bonds, right?
I don't know if they ever bought the corporate bonds. I know they said they would. They just opened the door that that's a possibility that they would do that, but they never actually stepped in and did it. It was
if
enough.
they did it at all. Yeah, if they did it at all, it was small. But that was enough, right? So I think look at the imperative of how this is being described, right? We can't afford to lose this. This is the new Cold War. China can't win, blah, 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 blah. And then look at the reality of the math. And you just, to me, it's elemental. They're going to have to buy backstop bond. Like they'll just take over NVIDIA, right? NVIDIA's on the tape today, guaranteeing, $250 billion of, I think it's OpenAI. I think it's OpenAI, some sort of data center here in Ohio, actually. And interestingly, NVIDIA's down on the day, last I saw, right? So NVIDIA is starting to trade down on guaranteeing other people's bonds. That's another signpost, right? That shouldn't be happening. And ultimately, I think Treasury or Fed will take over for NVIDIA. This is guaranteeing these things. They'll take over for SoftBank, take over and just backstop the whole thing. And it's, may not even be that expensive per se, but I think that's what's going to happen. And it'll be I think stocks go up on that. I think bonds go down on that. I think dollar goes down on that. I think inflation goes up on that. I think gold goes up on that. I think Bitcoin goes up on that. I think industrials go up a ton on that. So to me, it's just so crystal clear. That's where this is going. But again, it's Warsh is going to lose all credibility after it happens. and so will Bessent, right? Because Bessent will be running the friggin' Chinese economic model he's been complaining about for the last 15 years of his career. And that's fine. Like that's where this was always going to go. But just don't pee down my back and tell me it's raining. Just tell me the truth.
Yeah, I mean, they're taking stakes in companies like Intel. It seems there's Chinese characteristics for sure. But I want to talk a little bit more about the short term. We had quite the whipsaw in expectations in rates this year, from everybody saying we're going to get cuts to now people are starting to price in hikes. There was a period in time when people were pricing in cuts and the long end was selling off. Now we're having inflation concerns and the long end is selling off. And so I wonder, like, is there a world where without intervention in the bond market where you see the long end stabilizing?
Yeah, I think we're past, we've crossed the Rubicon on that front. And the bond vigilantes were for a long time kneecapped by derivatives. And the private vigilantes, but the vigilantes now are, Kevin Warsh is a vigilante, right? He's talking about selling bonds out of the long end. The global sovereigns are foreign central banks are vigilantes. They're not buying this stuff. They haven't bought this stuff for 12 years on a net basis. Central bank holdings of bonds are down slightly over 12 years as the debt has risen, like, I want to see about like $18 trillion over that time. Maybe it's just 12 trillion. What's 6 trillion between friends, right? So I think we're past the Rubicon on that front. Now, what could I do to get the long end down? I could get it down for a little bit for you, right? If you like, hey, S&P down 40, S&P down 20 in 2 days, 3 days, I could get the long end bid for you for 3, 4, 5 days, maybe even a week. And then it's going to turn around and it's going to start selling off with the S&P. We saw that in COVID. We saw it in Liberation Day. We saw it on the war. We keep seeing it. People don't want to believe it, right? It's like if you're watching the movie Jaws and it's like, oh, girl washes up.
Oh, funny he says Jaws. I went to go see that. I think I played a clip for you. They did Wonderwall. I requested Wonderwall. They did it for me as a clip on my channel. But while they were performing on the TV screen, you had Jaws playing. It's like 50 years now. Fuck. Yes, and I have a Jaws poster in my man cave.
Up, she's cut in half. That's just the motorboat engine. And then like the little boy gets chomped up, and then the fisherman gets chomped up, and like you see in the teeth, and you're seeing the bite mark. Then you see the shark.
I think it's time for a bigger boat. Famous line. I think you need a bigger boat. Something like that, right?
And you're and yet you go, I'm still gonna go swimming. I don't know what's eating people. There's there's something out there. Like the issue is there's too much supply. There's not enough demand at the rate that we can afford, and everybody knows it. Because it's a pretty straightforward math problem. And so like I can get you rates down for a week or maybe even 10 days. If we crash S&P, like if we have another Black Monday, like 87 event, I could get it down for you. The other way I can get it down for you is Kevin Warsh prints money and buys it and caps it. That'll get it down for you. And I guess the last way is, Besant going to, Warsh and saying, hey, revalue gold or Besant letting gold really run and then revaluing it and then telling Besant or Warsh, to create a TGA deposit and Besant buying back his own bonds. Then I could get it down for you. And if you did that, by the way, you get debt to GDP down. Now, sort of these traditional metrics that for the last 30, 40 years all work, but hey, if we have equities down 10%, that's going to create demand for bonds. It will not create demand for bonds until you de-lever the bet. You have to devalue debt to GDP from 125 to at least 80 and probably more like 60 to 70%, which means you either got to whack the heck out of the dollar, particularly against gold, or you have to do yield curve control. That's it. Like those are the ways out. And they don't want to do that because then they're going to be the John Laws who have to buy back all their bonds by printing money. That's where this is going.
Which one do you think is more realistic? You do have to give Warsh a little credit that he has at least come in saying that he wants to change the way that the central bank thinks. The idea of revaluing gold in the past, monetary policy regimes of the past few decades seems kind of outlandish. I mean, do you think that that Warsh would revalue gold, or do you think he's going to be more traditional and just do financial repression?
I think he's going to be much more traditional. I agree that it's outlandish that they would do gold at least until they absolutely had to do it. I'm trying to find here on my screen something that Warsh said recently because everyone's talking it, right? So last week, he told Congress that the Federal Reserve is not in the bailout business, especially not for the biggest debtor of all, the U.S. Treasury. Sorry, that was Gregory Ip at the Wall Street Journal. He did, though, append an escape clause. This is a direct quote last week from Kevin Warsh. Quote, in periods of crises like the 2020 pandemic and the 2008 crisis, central banks by design need to step into markets to create a fair price. End quote.
Okay, so we'll get fair prices.
Fair for who?
Yes, we'll get fair prices.
Yeah. So he's basically like, he's full of crap, to be blunt. Like he's going, when push comes to shove, he's going to play tough for a little bit. He's going to play harder to get, right? He ain't going to sleep with the markets on the first date. He's going to wait till date 3 when he has a crisis. And, then he's going to be sleeping with them, giving them whatever they want because he doesn't have a choice. His alternative is the treasury market dysfunctions, again, because it's a supply demand problem. If he wants to change that, he's got to devalue the debt.
Well, let's talk about where some of that demand is going. You said it's going to just other bond markets just because there is so much issuance, but also central bank buying of gold has re-accelerated. There was a brief blip in March when I think people were selling gold, to get dollars to buy oil as the price of oil went up, emerging markets in particular. But since then, buying of gold has resumed. We have stabilized a bit in the gold sell-off. I mean, do you think that now with the crisis maybe behind us again, do you think we are going to start to see the gold buying pick back up and a resumption of the rally?
I don't know if the crisis is behind us or not. I think that remains to be seen. But I do think the gold buying will just resume because I think there's a moment in time where people sell gold to get oil, right? Basically to finance reserves, and they sold treasuries right alongside that as well. You can see that in the data. But the longer a war goes on, the less you want to own bonds, and the more you want to own gold. And also, what this war has demonstrated, which is the Americans not only can't go to war on anything other than a weekend, and as long as the 10-year treasury yield is below 4.7%. But even under those conditions, they can only go to war for a couple months, and then they run out of defensive missiles and need China to restock them. And they can't make their own rare earths yet. And and
it seems like that drones have changed the whole landscape of warfare. Yep. Nasty. Cheaper.
with those set of circumstances, what do you want to own? The bonds of that country, or do you want to own gold? Especially knowing that, they're busy sanctioning everybody over everything. Still, if I was any random country, having been threatened by Trump, Greenland, France, Spain, England, Germany, Korea, they pulled the missiles for me, right? So, they love me so much. And then when the crap hit the fan, they pulled all my defensive missiles and came to Israel. What would you own? You own gold. And so I think that's what we're seeing. So I think, and then, oh, by the way, the Chinese, who were supposed to be the worst hurt of all of this, right? There was in some circles, this was a 5D chess move to choke off the Chinese. What have the Chinese done? They bought like 80 tons. Then the next month, and when the price fell, then they bought like 100 tons. Then the price stopped falling. Then they bought 110 tons. Then they bought 140 tons. This most recent month in June, they bought 173 tons. They're literally buying like 70%, 60. No, it's closer to 70% of global gold mine production.
They have bought tons of gold in the last months, taking advantage of the dip.
On a monthly basis, when they're supposed to be collapsing because they don't have any oil and this and that and the other. So like that narrative is being demonstrably proven false. But I think they're also going, oh,
right, take your U.S. treasuries buying gold.
You're going to knock gold down? Awesome. Wave it in because, and so I think really from here on out, I think gold buying is going to continue because you want to own the bonds of someone who can't afford to go to war over 4.6, 4.7%. Why? Because they're telling you if we actually have a real war, they're going to print those bonds into like oblivion to buy them all. Just buy gold.
So you think gold purchases are going to continue to accelerate from China? Let's say this crisis does continue. I mean, obviously they stabilized the price. They stopped importing oil. They sold a lot from their reserves. We don't really know how big those reserves are. Do you think that that's a lever that they can continue to pull? And how long do you think it can go?
I do think it's a lever they can continue to pull. Number one, if I read correctly the other day, they're the biggest refiner in the world, right? So, and they can buy it in oil, and they can buy it in yuan and dollars. And so now you can sort of play with you buy it in yuan, you can sell it in dollars. There's a lot of things you can do with a refinery and the ability to buy feedstock in two currencies. So that gives them optionality. What have we been hearing?
Are we back yet? There we are. Are we back? I think we're back. Okay. I dropped out. Yeah, because of the laptop. Yeah. The laptop. So, yeah, we are back. I think I'm going to need new laptop soon. Oh, yeah, I feel hot. Okay, happy 420. That's what I wanted to do. Happy 420. Light them up, baby. Light them up. I want to play a clip. It's been going around. I don't know if you've seen it. And then I'll get back to the interview. This was very interesting. I don't know if you saw this. I don't how much. Let's see. I'll put on the faster speed or not. Let's see. This is Scott Vicent. Listen to the lies.
Exquisite.
Yeah, so these are the displays of our currency over the years. Some of it, like we used to have silver certificates. We used to be backed by silver, sometimes gold.
Yes, and that is true. We were backed by silver and gold at gold certificates. You were able to go to the bank and get gold or silver for your certificate. Look it up. Google the images. They were cool looking bills too. They were blue. Some of them blue tinted.
And then in the 70s, we just went to what was called fiat currency, where
Yes, that's where Nixon took us off the gold standard in 71. Yep. And silver came out of the money and out of the coins in the 60s, 64, 65.
you didn't have to keep gold or silver in the vault. If any of these are still outstanding, though, the silver or gold for them is at Fort Knox, waiting for them to be claimed if so needed.
Yeah, but what he does forgot here, those certificates are useless now. You cannot use those gold, silver certificates. I think they stopped them in the 60s. No, you cannot use them to claim gold anymore. They are expired. So he's full of it. Full of it. Now, listen what comes next.
Have you visited Fort Knox?
I haven't. People on my staff has. We're going.
People from his staff has. Do you believe that? We're still waiting on that audit.
Going to the treasurer's office. The treasurer has been to Fort Knox, and I am happy to say all gold is present and accounted for. The U.S.
How much do we have? It's all unaccounted for? How much do we have?
has the largest pile of gold in the world, over $1 trillion at current market value.
And we're getting more gold from Venezuela, I hear.
Listen to this. And I hear we're getting more gold from Venezuela. Now watch it. Watch what Vicent says here now. Watch what he says here. Oh, God.
We're getting a lot from Venezuela. We're getting...
Yeah. We're getting a lot from Venezuela. Look at that little smirk on it. Yeah, because we fucking needed it, because we got rid of too much of it.
Gold, these oil sales are going great. It's going back to the Venezuelan people.
It's going back to the Venezuelan people. All of it? Maybe some of it.
Have the Trump accounts. This is something very special. And
okay. So yeah, I just wanted that clip there about the currency and the gold is kind of going viral amongst a lot of the financial channels over the last week or so. So yeah. So let me get back to the Groman interview. Hello, Halsey. Yeah. Hope I stopped it often enough so Fox will not give me so Fox will not give me a copyright claim
for the past year plus. What are they flooding the world with? Solar panels and electric cars. Like, you can see what's happening there. According to at least one source, in the first half of 26, they reduced oil demand by 1.4 million barrels a day by shifting to EVs. They have the grid to be able to do that because they spent the prior 20 years investing in grid and instead of in fighting wars in Iraq and Afghanistan. And so I think they have an ability, their reserves are not infinite, their SPR. And when Trump got elected, I hear businesses ramped up cash holdings to like 6 months of cash because they figured a trade war was coming. Trade war came. Bessent got it and said, we've got all the leverage. And 2 months later, he folded like a cheap suit, as did Trump. Then they spent 2025 really ramping up SPR and probably longer, right? SPR holdings. War comes, they run it down. My guess is they were probably ramping up purchases with oil down in the 60s and 70s a few weeks ago. Then we've heard that, in terms of some public on the LNG side, ramp up of that. And so they seem to be doing a pretty good job of managing these. And again, does it mean they can go forever? No. Does it mean they're omnipotent? No. But they don't have to be faster than the bear. They just have to be faster than the pudgy camper that's over there in Washington and in Europe and in the UK. Those fat campers over there, the bears will run down faster. It's just a pain contest. And like they won the pain contest in April, right? Of April of 25, Liberation Day. We're going to put it to them. By May, CEOs of several of the biggest retailers in the US, they went to the White House, said there's going to be empty shelves in 3 to 6 months if you don't stop it. Round 1 of the pain contest goes to China. Okay, let's go round 2. We're going to cut China off. Venezuela, Iran. Bond market goes to 466. It folds like a cheap suit. 10-year yield goes to 466. So, I've been very surprised. I was very surprised by what China did, to be honest. Had they not, I would have been right. Because they did what they did, I was wrong about the disruption, the oil interruptions, et cetera, we're going to cause. So I think they're going to continue to have flexibility around that because they've shown a willingness to be flexible and a willingness to react, right? They don't wait for, they just go, look, it's Trump. Oil's at 65. Do we think he's going to suddenly start being rational? Nope, buy oil. Oil's at 95. 10 years at 4.7. Do we think he's actually going to blow up his own market? No, he's Trump. He's inherently self-interested. Sell oil, sell, whatever. I think that's what they're going to keep doing.
And it is interesting because China had this huge property bubble. Their market has gone nowhere for a number of years. They've been willing to suffer through this period of down prices from their biggest asset classes. And I'm sure it's been hard for those people, but they haven't folded on it. They've said, this is what we need to do to get things back to normal. And they're doing it. And here we can't take it for a week, 2 weeks of market pain before we fold. I mean, you talked about the CEOs coming to say, the shelves are going to be empty. To me, it feels so much simpler than that. It just feels like it's market prices. It's purely market prices, and we can't take the pain here.
I would take it one more, which is the equity market is the economy. They actually have a real economy. We don't, and they're related. So it's a little bit of a flip statement. But she came out in, I think, 2018 and said homes are for living in, not for speculating. And when you look at when he gave that speech and what happened to home prices after, it was a distinct policy choice. We are going to deflate housing.
And that's what happened here, right? That's a great saying. Homes are for living, not speculating. And that is why you had a fucking problem here with the housing costs. That's part of it. Besides the fucking dollar becoming worthless.
And then you can also see loans picking up into different industrial basically making stuff to make sure that China 2025, which they had laid out in 2015, would happen.
There should be no property tax for a person's primary residence. All right? Why don't you stop the property taxes for a person's primary residence? All right? And then anything after that, second home, all right, investment home, then tax. Not a person's primary residence.
And so they redirected capital out of housing into goods, increasing goods supply, which is, we're seeing that in competition in cars, right? And it's hit corporate profit margins there, et cetera. It comes down to a view of where they want their country to be in 10 or 15 years, right? So do we want, America, we cater to the boomers, right? Home prices have to stay high. Equity prices have to stay high. Realistically, if either of those fall, the fiscal situation, which is already teetering, completely implodes. The Chinese, because they didn't do the dumb wars and because they don't have the social programming that we do, right? People say, well, their debt to GDP is higher. Well, yeah, do you include entitlements? Because if you do, it's not. And because they don't have the social safety net that we have, and they didn't do the dumb wars that we did for 25 years, they have more leeway to take some of that pain and take the longer run view of where do we want to be in 2030. Because what's going to start to happen if we just let home prices run and run and run where people can't afford houses is you're going to start to have political instability. If you have, I mean, there's Peter Turchin did a book on it, Turchin. I can't think of the name of it right now, but he created a scientific field called cliodynamics, which looks at basically it's wealth inequality and elite overproduction leads to political instability. And so people's like, hey, it's great. The US market's up and houses are up. And so it's all fine, right? Like think about what Trump, what was her name? The blonde, right? She's getting asked about Epstein. And she's like, the Dow's at 50,000, right? That tells you internally, that's the only thing they're talking about. This is our talking point, Dow's at 50,000. That's great. But political instability is already happening. Trump's here because of political instability. Charlie Kirk got shot. That's a symptom of political instability. The CEO of United Healthcare getting assassinated on the streets of Manhattan. These things didn't happen in America when I was growing up. You know, I have a friend of mine who has the contract for the medical examiner's office in two major second-tier cities of the United States. Okay, so anybody who dies of murder, suicide, drug overdose, suspicious circumstances, accident, they get them, and it's a monopoly. They said we are busier now than they were at the depths of COVID when people were drinking, shooting, and overdosing themselves to death. So you've got this sort of political stability dynamic that I think the Chinese are considering because they don't have the financing role that they have to address that we do quarter to quarter to quarter to quarter in the election cycle, you know, every 6 to 12 months. And so it's smarter. Like, how do you stop political instability? Well, the first way you do it is you don't make houses go up and up and up so no one can afford a place to live. Like, that's a pretty good, smart way. Like, if I wanted to create a revolution, I would jack up food prices, I would jack up housing prices, I would jack up healthcare prices, I would jack up education. And what are the Chinese are giving away education. Their house prices have crashed. Equity prices are down, right? So, you know, it could be a sign of weakness of the Chinese. Maybe they're afraid of a revolution. I don't know. But I can tell you the U.S., right? What do we have in New York? We have an avowed Marxist running this city of New York. And people are like, this is fine. The Dow's at 50,000.
There are mixed feelings here, depending upon who you're talking to.
It's going to get worse. It's going to get worse because you've got elite overproduction and you've got record wealth inequality. Wealth inequality in America is higher now than it was in the Gilded Age. It's going to keep getting worse.
Yeah, it's interesting.
Yeah, did you hear? What's his name? Mandari, gonna open up 30. It was a 30 government or state or city run grocery stores, and they say the prices are gonna be 30% cheaper. How do you think that's gonna work out, huh?
The Chinese as well. You know, I was invested in some of their consumer.
Oh, and who's gonna pay for it? The taxpayer.
Lending names. They're just seeing incredible loan growth, and the Chinese, by and large, it's not a debtor society, and it's people paid back their loans at incredible rates. But the Chinese cracked down on it. They said we don't want to have so much of a consumer credit driven economy because it creates these negative feedback loops when the tide goes out. And they stepped in and they shut down on a lot of the loan growth and a lot of the stuff that made the whole thing work.
The CCP doesn't like competition, right? Because at the end of the day, if you're making loans to the people, you're in control of the people, not the CCP. They don't like that.
Yeah, well, here the market seems to be in control. So we've talked about gold, we've talked about bonds. What about the dollar? I mean, you said you think they're going to have to whack the dollar, get it down, to help fix some of these problems. I mean, how is that going to happen with yields just continuing to rise and rise and rise? What are they going to have to do to get the dollar down?
Yeah, and with oil where it is, right? Like, you had a moment you could do it, and then you did this dumb war, and now you can't. You can't devalue the dollar with oil at 85. Come on, you're right. You know, very, very clearly over the last 3-4 years, as long as oil's between 60 and 80, the Treasury market's fine. Once it hits 85, it starts a dysfunction. Yields go up. You got to get it down. So if you're, for Besant, who came out in early 25, said, judge us by the 10-year. Well, how you doing, buddy? You're not doing good. The 3 arrows are all in the toilet, and the 10 years is 4.7. Nice job. Heck of a job, Brownie, right? So how are they going to do that? They're in a bit of a pickle, right? I think the way you do it is ultimately you let a momentary risk off. The challenge is that's like, that's like trying to, just have a small explosion by lighting a gasoline-soaked rag in a nitroglycerin plant. Like we just want a small explosions. We're just gonna. It's tricky. I think you need political cover, so you're gonna need risk off for a moment, and then you can, but paradoxically, it's going to send the dollar higher. That creates a debt feedback loop. That's going to send yields higher. You're going to get a moment where yields go down, and then they're going to go up at the long end on that, just like they have repeatedly. Because again, your biggest marginal, 40% of the notes and bonds net issuance since 2022 has been bought by Cayman Islands hedge funds since 2022. That's Fed white paper last October. What do Cayman Islands hedge funds do? Number one, they manage to a monthly mandate. So anytime volatility goes up anywhere, they degross their entire book. What do they sell? They sell treasuries, because they're the ones that, a lot of them are doing, so the bigger ones certainly, you're doing this hedge fund relative basis trade. That's who's buying all these treasuries.
Yeah, what's going down? What's going on down in those Cayman Islands? Yeah. I don't know. I don't know. There is a nice ETF. I'll save that.
And that's why, in the short run, why treasury yields, long yields go up on risk off now. You got very fickle creditors. So how do they get it down? I think you're gonna need a risk off, and then you're gonna need something that looks a lot like what we saw post-COVID, which is, de facto yield curve control, and with fiscal stimulus, and that'll do it.
Is that a dip you would be a buyer of? I mean, we talked about how reactive both the elected government and our central bankers have been to any sort of instability in prices. I mean, you look at comparing to 2008, how much faster during COVID they got the dollar swap lines out. They talked about backstopping the credit markets. Now, we've got the president. If we get oil above a certain point, the war is off. We're incredibly reactive, and any dip, whether it was Liberation Day or the Iran war or COVID, I mean, the greatest dip buying opportunity that many of us have ever seen. Is the next dip going to be one that you want to buy?
I think all the dips are ones you want to buy in dollar terms. Look, equities are still down 30% from 2022 in gold terms, and they're down 40% from 2000 in gold terms. And I think that is, as long as China is China, I think that's the new regime, right? Where even if we want to beat down gold and sort of make a statement about the dollar, what are the Chinese doing? They're just showing up and waving it in every month, more and more. And we can't afford to have a force majeure issue in London or in New York in physical gold. And so ultimately, the Chinese are driving the boat on gold. Chinese are watching all this and going, "There's a disaster. Like we did this, like in the Qing Dynasty, like 400 years ago. We know how this goes. It's like the Back to the Future. I've seen this one. Those are the Chinese right now. I've seen this one. I know how this goes. So they're going to keep buying gold because there is no mystery how this is going to go, and probably silver too, by the way. And so dips should absolutely be bought in dollar terms, but in gold terms, I think the next 5 years, I think we're gonna look back in 5 years, and I think the S&P is gonna be up big in gold or in dollar terms. I think it's gonna be down in gold terms.
What do you have for your price target for gold over the next year?
I think it probably gets back and probably through all-time highs. I mean, that's actually a pretty big rally from here. So I don't like to be that aggressive. So let's say it goes back to 5,000, and okay, eventually. Because I also think part of it too, like the other thing about the Chinese is a very gradualism, right? They don't do big splashy things like the Americans do, right? It's very subtle, right? We drop bombs and wipe out, the family or the ruling family of Iran. The Chinese are much more subtle than that. And they've done the same thing as it relates to gold. They were on the ropes a bit in the third quarter of 23. And what happened? Like they changed the rules a bit, and spreads in Shanghai blew out. Gold premiums blew out. And we wrote a report at the time for clients. They're using gold to defend the yuan. And we were right. That's exactly what happened. It's basically, okay, the yuan's under pressure. We're just going to empty London and New York gold vaults until the pressure's removed. And it was, and it was. And they did, and it was. So I bring that up by way of saying, I don't think like they're going to be, a lot of gold people like, oh, they're going to make it 10,000 tomorrow. Probably not. That's not their style. But their style is it'll be 5,000 in a year, and it'll be 6,500 in 2 years, 3 years. It'll be 8,000 in 4 years, and it'll be 10,000 in 5 years. And the S&P will have gone up from 7,000 to 11,000 or something. And yeah, S&P up in dollar terms, down in gold terms. Because that's the one thing, the other thing that a lot of the China hawks like, oh, property's gone nowhere, stocks have gone nowhere. Tell me how gold's done in China. because that's one of their biggest savings. It's also a huge capital base for the banking system. How's gold done? Oh, well, that's up 4x in the last 6 years. And oh, by the way, the same people looking for a collapse in the yuan against a dollar have completely missed a collapse in the yuan against gold, which is what's happening. And it is literally the way the system's designed for the yuan to fall against gold over time. So because that's how they're internationalizing the yuan. They've said that repeatedly for 10 years, 11 years, 12 years. So that's how I think about equities. It's dollar terms, gold terms. I think ultimately good for Bitcoin too, but not yet.
Yeah, we haven't talked much about Bitcoin. What's happening there? I think there's obviously a huge 5-year comp problem. I think that's something with Bitcoin. Obviously, you have the store of wealth, the people who want to get a hard asset outside of the dollar system, but at the same time, it's still a highly speculative asset. And you've got all of these other speculative assets right now that people are making money on. You're seeing
what does it do?
Streamers who used to cover meme coins are covering AI stocks. How much of the slowness in Bitcoin do you attribute to there's another flashy, shiny thing in the room right now for speculators to go and tell their friends about?
I think that's a big part of it. I think you've got that thing, flashy competition syndrome. You've got a civil war going on in Bitcoin of sorts, right? Between the BIP versus non-BIP. And like, I'm a Bitcoin guy. I like it. I've owned it. I don't have time to figure out what's what. I don't like, just tell me when you stop like beating the heck out of each other and what we're doing. You've got some increasing still, credible concerns about when quantum becomes an issue potentially for a part of the base of Bitcoin out there. And to me, the other, you've also got the 4-year cycle issue, which suggests we have more downside from here, given historical precedent, through maybe the fourth quarter. Early.
What of AI influencing Bitcoin? Oh, did you know that Iran, I believe, I don't know, fact check me, is supposed to be one of the biggest, if not the biggest miners of Bitcoin? Yeah. I have no clue what's going on, says Frank. Join the party. Got some clues. Well, that's why we're here, Frank. Yeah. Bitcoin, the promise of, out of the system money, all this shit. I'm still surprised it's lasting. I look at, most of all that crypto and Bitcoin. It's just like a casino, really. It's just a casino. The market in general has become like a casino. We have no true price discovery.
Fourth quarter this year. And then for me, the biggest hang up for me still is it still trades like a tech stock. Days when NASDAQ's up, it's up. When NASDAQ's down, it's down.
Mm-hmm.
Except for this year.
It's underperformed the NASDAQ massively for the first half of this year. And then
underperformed NASDAQ probably because of AI. But yeah, generally it's been following NASDAQ Bitcoin because it's tech. But it ain't money.
It has actually outperformed the NASDAQ a bit in the last 2-3 weeks because it's already been knocked down. Now, I'm very nervous about anything tech related. I don't like the setup there at all. And so basically for me to kind of, I owned a lot of Bitcoin. It was a huge part of my liquid net worth. I sold most of it, almost all of it.
Me too.
Last year, 96,000, 23, 24 ounces of gold. We're still sitting here, 14, 15 ounces of gold, 65,000.
I sold most of mine and bought gold with it.
I'm not buying it back with what I see the risks on tech. Because I just, yes, Bitcoin's already sold off. But if we really get a risk off that we need for Warsh, that I think we need for Warsh to have the political cover to cut rates aggressively, weaken the dollar, all these things, and this newly emergent competitive setup from China. Look, if we have a 2-3 month stretch where the NASDAQ really gets hammered, I don't want to own Bitcoin on that. And I'll be happy to be wrong if that's the case. Look, if Bitcoin goes up in that, I'm going to be dead wrong. But I just have not seen anything in the last several years to suggest that if the Nasdaq really gets waylaid for a month or 2 or 3 months, that Bitcoin's going to somehow, scream to new. Now, when they start backstopping Nasdaq, or when Nasdaq gets bad enough that it's becoming apparent they're going to have to backstop it, that is where I want to be adding back to Bitcoin. And I might be being too cute by half, but I think that's where this whole thing's going. That's how I see it playing out. And then I want to be loaded up Bitcoin to the gunnels, and then I'll take my chances. I just think the price is going to be lower than where it is today.
You think that Bitcoin is going to be the play over gold?
Yeah, I would. I mean, history would suggest that. Yeah.
We have a Fed meeting coming up. As you said, the first date with the market, Warsh came out and he said you're not getting any, and everybody interpreted it as quite hawkish. But he's also said that he doesn't want to be giving a lot of guidance. I mean, what do you think the chances are that he kind of whipsaws the market around and goes back the other way just to sort of teach us all a lesson about taking his words too seriously? I mean, do you think that we're set up here with everybody expecting hikes into the end of the year for Warsh to kind of wiggle around a little bit and make the market unwind all of that pricing?
I have no edge here, so take everything I'm about to say on it with a block of salt. The fiscal situation suggests he can't hike rates this year, full stop. The oil market suggests he should hike rates, full stop. The tech market suggests he should be cutting rates aggressively, full stop. If he cuts rates or he hikes rates, long end yields are probably going higher either way, which is only going to then. So if I'm him, I never would have taken this job. Unless they're like depositing $100 million in a Swiss bank account or something for him to be the bad guy, right? Or something like that. But even then, I don't know that I would do it because my reputation is worth more to me than $100 million. So anyway, I don't know what he's going to do, but I feel pretty strongly that every move he makes, there's going to be something wrong with it. Like, he's got options, but they're just all unpleasant. Raise rates, 25 basis points might be enough to kick the legs out from under what's going on in AI. I mean, look what we're watching, like you said earlier today. Okay, well, don't do anything then. Okay, well, now oil picks back up. And inflation picks back up.
Lose the long end even more. Yeah.
What are you going to do? And it ultimately, the fix is simple. It's just not politically easy. It's those entitlements have to go away, and there's no way you can make them go away. Okay, so if the entitlements won't go away, then the war's got to go away, and the Defense Department's got to go away, but it's got to go away without a recession. We can't do that. And okay, well, then the last option is you got to cut rates when you shouldn't be cutting rates and buy a bunch of bonds when you shouldn't be buying those bonds. Devalue the heck, yield curve control, devalue the heck out of the currency. Those are your options. And so to your point, right? This is the first first day. Last month was the first day. Here's the second day. I think he still plays hard to get, but I think he plays hard to get in an easy to get way, right? Where there's some mystery, like, hey, just stay with me. It's going to be, just give me a little time. I'm going to be canceled by Me Too, luckily, unfortunately, by the end of this conversation, apparently. But luckily, it's not a couple years ago. At any rate, I think he's trying to ride two horses with one ass for another till the next meeting. I don't even know when that is. I should, but I don't. But it's probably 6 weeks, 8 weeks.
Oh yeah, 6 to 8 weeks.
September, something like that.
Trying to ride two horses with one. La 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 la. La 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 la. I should yeah. It's laptop on StreamYard. Just yeah. That's why. When I'm on the desktop, I don't have any of these issues.
He's got three, and it's not like this is like, these aren't important constituents, right? This is oil and inflation, the treasury market, and AI, which is this like the key driver to economic growth over the last 2 years, right? So you're like, one of them is going to be unhappy at least, and maybe two, and that'll set us up for the third day, which could be a real doozy.
I want to close with a question about sequencing and what you're watching and how you think this is all going to unfold. What is the area that's going to start this? Is it the AI trade unwinding? Is it losing the bond market? Is it more conflict, the forever war in the Middle East? What is it that you think people should be paying most attention to sort of see the path forward that you're talking about unfold?
I don't know. And that's what scares me. That's why I'm sitting, personally, of my liquid net worth, nearly 60% in cash, T-bills, and gold bullion. Because I don't know. I've got like a bunch of flies flying around looking for a windshield. So what's the windshield? Is it the Japanese bond market? I don't know. Is it supply chains now that we're sort of reclosing Hormuz? I don't know. Is it the UK bond market? I don't know. Is it the German bond market? I don't know. Is it the US bond market? I don't know. Is it this war? I don't know. Is it, the fact that Russia has been helping target US assets and can continue to do so, and we're out of Patriot missiles and something untoward goes boom? I don't know. Is it Ukraine and Iran getting into it now, and all of a sudden, I don't know. There are so and again, I wouldn't care is too strong a term. I would care a lot less about any of these things if we were trading at 2002 PE multiples and levels of sentiment. If we were trading at 2008, if we were trading at 1980, right? We're like a 42K Schiller PE. Like, it's.
I'm sorry, I'm just pausing to say, man, more fucking rain. Holy shit. Lots of rain today. And let's make summer hot again. I mean, come on.
It's la la land. And that's why, even though I would expect gold to sell off, as if any or all of these things go boom in the short run, I think gold actually would still go down because you're still a financialized instrument. I look at all these things and like, it's just so crystal clear. I want to have the gold position there because we know in 2 years, dollar, stocks higher in dollar terms, lower in gold terms. Like, gold is now the reference point to sort of everything, in my view, as a result of all the untenability of all these issues, the untenability of wars. Like, he's got to make a choice and they all suck. There's no good choice, right? Like, do you want to shoot yourself in the head, in the heart, or in the nuts? Pick. Like, none? No, you have to shoot one. Pick. That's where he is.
So
wait a minute. Wait.
Wait.
I don't know who's calling me. Which would the heart, the head, or the nuts? The heart, the head, or the nuts? You have to go with the nuts, right? It'll hurt, but you'll live. Who the fuck? Scam alert? Don't know. But anyway, yeah. What would you heart? Come on, I don't know. I don't know. Poor choices there. But yeah. I guess if you did get shot in the nuts, you might as well fucking be dead too, right? You might as well be dead. What? No sex? Fuck what? I'm gonna have to probably piss the shit out of a bag the rest of my life. You know what? Maybe. Yeah, you're probably better off dead.
Stocks, the dollar, and the bond market. Which one do you think is a bigger bubble right now?
The biggest bubble, I guess, is still the bond market on a real basis, right? It's because to own long-term bonds, you have to believe that your own government is going to defund itself, defund the Defense Department, defund the most powerful political constituencies, and crash the stock market, which would crash the bond market if they tried it, by the way, just to preserve the real value of the bond market. Like, there is zero chance that's going to happen. And so to me, the only question on the bond market is like, what is the yield that they ultimately YCC at? That's the most interesting thing to me about the bond market. The rest of it, like, if you want to own bonds, buy gold. And I think that's where the market's going to go. Like if you want to own duration, own gold, because gold is just a 0% yielding bond of infinite duration, finite issuance, and infinite face value. Why would you own a 10-year treasury, which is 4.6% yielding, infinite supply, finite face value, finite yield? And I think as more, central banks have gotten that. They got that 12 years ago. U.S. banks are like, no. Chinese banks are like, yeah, wave it in. Chinese people wave it in. Yeah, we get it. Most of the the global South, like, we get it. Wave it in. The Western, and it's not just a U.S. problem. It's the Germans, it's the UK. They're all on the same page. Like, oh no, these bonds, these are valuable. I'm reading about the South Sea bubble right now. It's like, I'm reading this book. I'm 100 pages into a 220-page book, and I must have laughed out loud like literally 15 times already, because it's just like, oh my God, this is all just happening again.
Yes, I've seen this one.
I've seen this one.
Yes.
Yeah, exactly.
Yes, indeed. Well, Luke, we will leave it right there. People can find your writing for your clients that you talked about today at Force for the.
I hope you enjoyed that. I hope you got something out of it. I hope you got a little bit of a financial education. I know there's a lot there to digest. But I hope you enjoyed it. Now, he did mention Rush and the song Free Will. And I know Luke is he's in Cleveland. So I found a Rush song. I found Rush Free Will live in Cleveland. I'll play the song. If you want me to open up the room, if you want to come on in, give me a 1. Put a 1 in there if you want to come on in and hang. Otherwise, I'll be on my way there, okay? Okay?
Those who think that life is not enough to shine, say hopes of holy horrors to I'm a
Oh, great song. Where's the lyrics?
without summer springs of flowers we cannot perceive. Stars on the line, or the gods of a line. David's better to give than receive. You can choose a red divine in some celestial voice. If you choose not to decide, if the love made a choice, you can choose for phantom years and constructive care. I will choose a path that's fair. I will choose free will. Those who think that they themselves are using and the causes that against them they were born in our trade. All to your day, a prisoner in chains. I'll be done over no mistakes. No face, you can pray for a place in heaven's on earth estate. You can choose a ready life in some celestial voice. If you choose not to decide, if they have made a choice, you can choose your phantom fears and disaster fear. I will choose a path that's fair. I will choose free will. You got to stay ready, guys. Some celestial boy. If you choose not to decide, if they have made a choice, you got to choose from phantom fears. Kindness I can care. I will choose a path that's clear. I will choose free will.
Ah, yeah, great song, great album. If you don't have that, Spirit of Radio, was that the name of the album? Spirit Radio is on there. Free Will, Jacob's Ladder, I think is on there. A lot of good hits on there. Yeah. I got no takers today. Okay. Well, I guess we'll see you around. Hope you enjoy the hang. All right. Have a great rest of the night, everybody. And may the force be with you. Oh, Music Fest is coming up. Can't wait. Starts Friday. My friend's coming in Saturday. I am fucking psyched for that. Thursday night, I'm going to go to that music bingo again. So that should be fun. So, yeah. Yes, yes, yes. Summer, summer, summertime.
Verily, the force within thee is strong. Heed it and conquer all.
And it's gone. Poof.